Hey everybody, welcome to the morning market briefing. It's Monday, July 20th, 2026. Hope you're doing well out there. Hope you had a good weekend. Jumping in, getting a little movement on oil prices. Been getting up as high as into the 80s over the weekend, but getting reports this morning that perhaps diplomatic solutions are still, they're in motion. I'm hesitant to say they're making progress, but that's what we're hearing most recently.
We had oil, one of the oil contracts, Brent, actually got into even the low 90s over the weekend. And it really, when I refreshed last night and I saw bonds trading down 10 points, I'm like, you got to be kidding me. But it seems like a lot of that's come back this morning because, as you mentioned, the Iranian foreign ministry spokesman, Ismail Baghi, says the diplomatic apparatus has been active in recent days, and ideas from some mediators have been conveyed to the Islamic Republic of Iran. What that means, and I don't know.
It means ideas have been shared.
It's because even if we have an agreement, it seems like that means nothing. Hormuz traffic has ground to a standstill, and it looks like American casualties, importantly, are beginning to ratchet up. That got some headlines. Another 2 service members were killed in Jordan, and there have been some reports, and I don't know what to make of them, but there have been some reports that there have been more casualties than have previously been reported. I think New York Times was reporting that, or maybe the Wall Street Journal. So again, interest rates opened higher last night, but stabilized a bit after that. Right now, at least when I did these notes earlier this morning, they were sitting right at 456 on the 10-year, which seems incongruent with a core inflation number that's easily in the 2s and going lower. If you look at the core sticky CPI or any of these other metrics, we really don't have as much of an inflation problem as we did, and yet rates are as high as they've been. So on the long end. So I find that interesting.
Tom, from your estimation, what's keeping rates up? Is it purely concerns about the conflict? It seems like given the length of time we've been in this, that there should be some other factor at play.
Yeah, I think it's a number of things. I think that there's just too much issuance right now. There's too much capital to be eaten up, whether it be equities or fixed income. We're just seeing an enormous amount of, stocks and bonds hit the market simultaneously, while also seeing a fair amount of fear with the AI trade kind of turning over. We're seeing, economic data start to kind of crumble just a little bit, at least as reported. And so I think that, honestly, it's mostly vibes. We are net down from last week. Notably, we were higher after the CPI and PPI print on the 30-year than we are right now. So we have reined that in a little bit. Expectations for hikes have jumped kind of right back to where they were last week, despite really no new information other than oil is up. But they didn't really come down as much as you think based on the oil. It was more on the actual CPI print. It's just bad vibes out there, man. I will say that a number of super users reached out to me over the weekend indicating that they've joined my team of the Annihilate Iran and Just Move On coalition. We're few, but we're growing in numbers and in passion. So, I think also globally, unlike periods in the past, the relative value play is really not there as much for the U.S. Treasury as it used to be. You start looking around. The UK 10-year is touching 5 this morning. And so it's not just like runaway, we're at 1, everybody else is at negative 50 basis points. There's a real argument that maybe some of that money is flowing to other sovereign debt. I would say, though, I was listening to a podcast over the weekend, and one of the topics of discussion was that the United Kingdom does have cheap bonds, but they just crossed over the point, or at least are on pace this year, that working age benefits, so basically their version of welfare, now exceeds all income tax receipts. Wow. So they're set to spend more money on people who are under the age of 60 in terms of welfare than they are going to receive taxes. So there, talk about bad situation.
That seems unsustainable.
Debt to GDP. It's insane. So they're, while relatively cheaper, and I think there's some money flowing there. Aussie bonds are roughly the same level, right at 5%. People I think are flowing some cash that way, but I don't know if they're making the right moves there. I worry that they're going to, just be spiraling out of control at an accelerating rate. So,
well, we have a new prime minister there now. Keir Starmer has officially resigned. We knew this was happening, but now this morning it was official. So he's out, replaced by the Manchester guy, Burnham. So he was a socialist. So I don't know if there's going to be any change to that redistribution anytime soon. We don't have elections for, I think, another 2 years. They obviously can call them sooner than that if he wants to kind of solidify his standing. But my guess is that they won't because he would just knock himself out.
Yeah.
Yeah, it's an interesting.
It's musical chairs.
Yeah, I'm a little disappointed that Argentina didn't win the soccer, though. I mean, their 10 years at 870, so pretty cheap. But I would argue they're moving at least the right way in terms of their economic reforms than, say, noted Middle Eastern country Spain that won the World Cup. So, I mean, we'll see how it goes.
What a thrilling game that was.
0-0 after 4.5 hours of play.
Martin watched the second half, my son, and I kind of hung out with him while he was doing it. He's like, wait, they're going to keep playing? I was like, yeah, man. And then he finally wrapped his mind around, okay, there's 2 15-minute periods of extra time. And he learned the hard way that means 20.
Yeah, it ends up actually, the time on the clock,
they
should report that as total time played.
Yeah.
I will say that the flopping was at just an electric level. The red card that ultimately killed Argentina.
Well, he got real fired up on that. He was like, Dad, you got to see this. And I looked and I was like, he barely touched him, dude.
Yeah, he made a full front flip onto his hip to pretend like he had been somehow just absolutely mangled on a very, very chance collision.
And Enzo Fernandez should have been red carded so many times before that tackle.
It was
so to get the second yellow for that tackle, I mean, it was very theatrical. I mean,
oh my gosh!
I mean, like the guy, I don't know how the guy got so much air. Like, that's impressive. Like that's like a 10 out of 10 in the Olympics.
Yeah. I mean, you think
he should
about
do floor routine.
Yeah. Think about the amount of athleticism it is for someone to kick you in the shin. In order for you, and then you to immediately execute a front flip.
It was impressive
with a front side 1080 or whatever.
Yeah, it was. He had like a quarter turn, so he landed on his side.
Yeah, it was something. Domino's out with earnings up about 6.5%. Pretty strong performance here, Ben, and interesting commentary on the consumer.
Yeah, they just had to, what's the phrase, not suck, and they did not.
Language.
Wow.
Good grief.
And
getting wild on a Monday.
So U.S.-owned comps accelerated slightly. U.S. franchise decelerated a little bit. International comps did a little bit better. I think the big story here is that they actually opened more international stores this time. This has been a big knock on the stock for a while. About 2 or 3 years ago, one of their big international franchisees basically said we're not growing anymore, and that really hit Domino's, and so they got some growth back there. They also said they had some positive, meaningful order count growth. I think at the end of the day, it's a stabilizing business, but we don't really know if it's back to growth at this point in time. I don't think you need to be when you're 18 times earnings versus what they were. It's like 30, 35 times earnings. They do have a lot of debt, but it's a franchise model, so they generate a lot of cash to support that debt. I think it's fine. 6.5% honestly makes sense pre-market because of where expectations were, but I don't think this is something you really need to chase.
Yeah. Busy week with earnings. So I figured we could just spend a little bit of time here highlighting what we're looking forward to. Tom, starting with you, put you on the spot. It could be a company, it could be the ECB decision, it could be whatever. What's moving the needle in your eyes?
I mean, it's just such a weird hodgepodge. I mean, I think the home builders will be interesting. I think that sort of the knock-ons from the home builders, some stuff like Graco, which makes the spray paint guns that we own a little bit of, will be interesting. Just because, I mean, that's where the economy is. And if we continue to see weakness there, I mean, we've had such high interest rates for so long. Mortgages are insanely cheap. If there's some weakness there, I think that the knock-on effect is that you're going to start to see some of the economic data also start to unwind, at least around housing and I mean, that's the U.S. economy, if anything is. So that's really kind of where I've got my eyes this week.
Ben, how about you?
Yeah, I think, D.R. Horton was top on my list. They report tomorrow morning. I'm curious to see that we've seen interesting stabilization from the home builders the last couple of quarters, not because they're selling a bunch of houses, but they've kind of rebased their businesses and they're stable, kind of bouncing along the bottom, which has been good enough, kind of similar to a Domino's. The question is, will that start to pick up? I don't expect it to pick up in the immediate term, but I do take note that I feel like homes are starting to move again, and I get that it's the summer selling season, but I just get the sense that people are less mortgage rate sensitive today than they were 2 or 3 years ago, and I think that's what happens. I mean, everyone talks. The bigger piece here is that finance is a rate of change business, and that once the rate is what the rate is, people have adapted to it. I mean, I think even in inflation, we care about inflation. We don't really care about price level, at least from a finance perspective. We care about how prices are changing, but we don't really care about what the price is once the price is set. And so it's the same thing in housing. We care about where interest rates have been and where they are going. But right now, mortgage rates have been between 6 and 7% for the last 2 or 3 years. And I think that a lot of people initially had sticker shock with that. But we're now 2 or 3 years into this. We're now almost 7 years past the pandemic. It's just unbelievable. And, that's history. And I think that people have adapted to this new reality. And I think the excesses that were created during the pandemic really have lasted for a long period of time. But even those excesses at some point do get petered out. And so I'm curious to see what D.R. Horton says about that, because the millennials still need to buy houses. I don't think they all bought houses when they could have. And then the second one is GE Vernova. This is a company kind of pulling back the curtain of what we do here at Narwhal. We're really aggressively looking at GE Vernova as a potential investment. We haven't pulled the trigger on it yet. They make gas turbines. A lot of people have talked about GE Vernova as this is a spin-off from General Electric of their wind business, but really the bigger business there is the gas turbine business. And I am firmly convinced, and I've said this in our internal committee meetings, investment committee meetings, that I don't think nuclear is going to be any sort of solving the data center energy problem over the next 5 years. It's just not. I mean, small modular reactors are maybe 200 or 300 megawatts each. Tell me when they've broken ground and are actually producing power, because that's not happening anytime soon. And meanwhile, you got to spend 5 or 10 gigawatts for a lot of these data centers. So you need like 20 of these SMRs for one data center. Gas is where it is. I mean, we have so much gas in this country that we're burning it off.
Hicks is.
We just need to capture that gas and turn it into electricity. And I think that that's where you need the gas turbines, and that's where GE Vernova and a couple others come in. But they're the big 800-pound gorilla, and so that's one where we could see a big increase in demand for them. We've already seen a huge order growth. So I'm curious to see what they say on Wednesday morning when they report earnings. And then obviously we have Google, see what they're doing. They delayed I think it was on Friday, they delayed their Gemini model.
Yep.
They were going to launch their Gemini 3.5 Pro, but they delayed it because it wasn't helping coding as much as they had anticipated it would.
They'll all be big. Google will probably dominate the headlines. I'm curious on American Express. Obviously, we've heard from the banks, but just interested to see more underlying data on the consumer. We continue to get survey data that I think is a little bit silly and goofy, and in many cases one-sided or not showing the whole picture. So I think American Express is a good read-through, further follow-up on how the banks have seen the quarter and how they're seeing the economy.
And what's nice about American Express is that they usually give the first 3 weeks of the July. And so far in June, I was very surprised as to the economic strength in June that's persisted into July that we've heard about so far. So American Express, will they support that, and I think they will. And if they do, that again gives me more confidence in where we're going as an overall economy, despite these things with the oil and the war and the housing market. So
Good stuff.
Got some breaking news.
Go.
I don't know exactly what the ramifications will be this in real time, but the Houthis have announced they're imposing a maritime blockade on Saudi Arabia. So
they've been threatening this for a while, and
yeah. So I'm like not even quite sure how they would do that. Is there enough maritime power for the Houthis?
I mean,
rocket
basically
power?
have to close the Red Sea.
Yeah.
Are we just going to get rid of oceans?
Yeah.
Seems like the water's really the problem.
Yeah. This is
It's probably not great for oil prices.
oh, what a
Throw
bunch
that
of
out there.
what a bunch of wonderful
Throw that
people.
out.
Many good people on both sides, right? Saudi Arabia and the Houthis. A lot of good, solid folks.
Crazy. What a Monday. Yeah, we'll report back more on the impact of that tomorrow. Y'all have a great day. Talk to you soon.